ExamPrep.School. Maryland Property Producer Exam, Exam Code 20-31. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Insurance regulation, general insurance, property insurance basics, dwelling policy, homeowners policy, auto insurance, commercial package policy, business owners policy, other coverages and options. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under Maryland law, which disclosure must an applicant include on the property producer license application? A. Only felony convictions within the past 7 years. B. All felony and misdemeanor convictions regardless of time frame. C. Only misdemeanors involving fraud or dishonesty. D. No criminal history disclosures are required. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is B. Applicants must disclose any felony or misdemeanor conviction when applying for a Maryland property producer license, per statutory requirements to fully report criminal history. Reason A is not correct. Limiting disclosure to felonies in the past 7 years omits misdemeanors and older convictions, which must also be reported. Reason C is not correct. Requiring only fraud-related misdemeanors is too narrow because all misdemeanors must be disclosed, not just those involving dishonesty. Reason D is not correct. Maryland law mandates disclosure of criminal convictions, so claiming none are required is incorrect. Question 2. After passing the Maryland Property Producer Examination, within how many days must an applicant submit the license application to the Maryland Insurance Administration? A. 90 days. B. 60 days. C. 120 days. D. 180 days. The correct answer is A. Maryland regulations require submission of the license application within 90 days of passing the qualifying examination for property lines. Reason B is not correct. 60 days is too short and does not meet the 90-day statutory filing period. Reason C is not correct. 120 days exceeds the maximum 90-day window allowed for application submission. Reason D is not correct. 180 days is beyond the permitted time frame, so it is incorrect. Question 3. What is the current application fee for a Maryland property producer license, and when does an appointment take effect after the insurer submits notice? A. $120 application fee, effective at 12:01 a.m. the day after the insurer files the appointment notice. B. $100 application fee, appointment effective immediately upon filing. C. $150 application fee, effective at 12:01 a.m. on the filing date. D. $80 application fee, appointment effective after department approval. The correct answer is A. Maryland charges a $120 fee for a property producer license, and an insurer's appointment takes effect at 12:01 a.m. on the day following filing of the notice. Reason B is not correct. A $100 fee is too low and appointments do not take effect immediately upon filing. Reason C is not correct. A $150 fee is incorrect and appointments do not become effective on the filing date itself. Reason D is not correct. An $80 fee is wrong and appointments do not await department approval before taking effect. Question 4. If an applicant withdraws or is found ineligible for a Maryland property producer license, within how many days must the insurance commissioner refund any unearned application fee? A. 30 days. B. 60 days. C. 90 days. D. 120 days. The correct answer is A. Under Maryland law, any unearned portion of an application fee must be refunded by the commissioner within 30 days of withdrawal or an eligibility determination. Reason B is not correct. 60 days exceeds the 30-day refund requirement set by statute. Reason C is not correct. 90 days is beyond the allowed period and thus incorrect. Reason D is not correct. 120 days far exceeds the maximum statutory refund window. Question 5. Which prior offense would disqualify an applicant from obtaining a Maryland property producer license? A. A felony assault conviction 8 years ago. B. A misdemeanor theft conviction 4 years ago. C. A DUI conviction 2 years ago. D. A felony conviction 12 years ago. The correct answer is B. Maryland disqualifies applicants with a misdemeanor involving dishonesty or theft within the statutory look-back period, making a theft conviction 4 years ago disqualifying. Reason A is not correct. An assault conviction is not disqualifying unless it involves dishonesty or breach of trust. Reason C is not correct. A DUI does not involve dishonesty and does not automatically disqualify an applicant. Reason D is not correct. A felony older than the statutory look-back period, generally 10 years, does not disqualify an applicant. Question 6. Within how many days must a Maryland property producer licensee report a change of business address to the insurance commissioner? A. 30 days. B. 10 days. C. 60 days. D. 90 days. The correct answer is A. Maryland regulations require licensees to notify the commissioner of any change in business address within 30 days of the change. Reason B is not correct. 10 days is shorter than the 30-day window specified by statute. Reason C is not correct. 60 days exceeds the allowed time frame and thus is incorrect. Reason D is not correct. 90 days is beyond the permitted reporting period. Question 7. What disclosure must be included on the renewal application for a Maryland property producer license? A. Number of continuing education hours completed. B. Current errors and omissions insurance coverage limits. C. Commission rates earned during the prior term. D. Total pending claim amounts handled. The correct answer is A. Renewal applications require disclosure of completed continuing education hours to verify compliance with Maryland CE requirements. Reason B is not correct. E and O coverage details are not disclosed on the renewal application. Reason C is not correct. Commission rates earned are not a renewal disclosure requirement. Reason D is not correct. Pending claim amounts are not required disclosures for renewal. Question 8. How many days before expiration can a Maryland property producer submit a renewal application to the insurance commissioner? A. 90 days. B. 60 days. C. 30 days. D. 120 days. The correct answer is A. Producers may file a renewal application up to 90 days before their property producer license expires in Maryland. Reason B is not correct. 60 days is too late as the window opens at 90 days beforehand. Reason C is not correct. 30 days does not meet the 90-day early filing allowance. Reason D is not correct. 120 days is earlier than the permitted filing period. Question 9. What is the renewal fee for a Maryland property producer license, and when does the renewed license become effective? A. $120 renewal fee, effective at 12:01 a.m., the day after the renewal is processed. B. $100 renewal fee, effective immediately upon payment. C. $150 renewal fee, effective 30 days after submission. D. $80 renewal fee, effective at the end of the calendar month. The correct answer is A. The renewal fee for a Maryland property producer license is $120, and the renewed license takes effect at 12:01 a.m. on the day after processing of the renewal application. Reason B is not correct. A $100 fee is incorrect and renewals do not become effective immediately upon payment. Reason C is not correct. A $150 fee is wrong and there is no 30-day waiting period after submission. Reason D is not correct. An $80 fee is incorrect and effectiveness is not delayed until month end. Question 10. If a Maryland property producer fails to meet continuing education requirements and the renewal is denied, within how many days must any unearned renewal fee be refunded? A. 30 days. B. 45 days. C. 60 days. D. 90 days. The correct answer is C. Maryland law requires that unearned renewal fees be refunded within 60 days if a property producer renewal is denied for failure to comply with continuing education requirements. Reason A is not correct. 30 days is shorter than the 60-day refund period mandated by statute. Reason B is not correct. 45 days does not satisfy the full 60-day statutory requirement. Reason D is not correct. 90 days exceeds the allowed 60-day refund window. Question 11. A Maryland insurance producer discovers that a continuing education certificate submitted for license renewal was forged by a course provider and then submits it to the commissioner. Which action by the producer would most likely trigger disciplinary proceedings under Maryland law? A. Failing to complete the required continuing education hours within the renewal cycle. B. Submitting a forged certificate of completion to the commissioner. C. Neglecting to report a change of residence address within the required period. D. Advertising insurance services without obtaining prior approval from marketing materials. The correct answer is B. The correct answer is submitting a forged certificate because knowingly providing false CE documentation is a specific prohibited practice that triggers disciplinary action under Maryland insurance regulations. Reason A is not correct. Falling short of CE hours prevents license renewal, but does not itself initiate disciplinary proceedings. Reason C is not correct. Late address reporting may result in administrative penalties, but is not a CE-related disciplinary trigger. Reason D is not correct. Unauthorized advertising may require corrective action, but is not a continuing education violation. Question 12. A Maryland insurance producer moves to a new home on August 1st and delays informing the commissioner for 2 months. Under state regulations, within how many days must the producer notify the commissioner of this change? A. 10 days. B. 30 days. C. 45 days. D. 60 days. The correct answer is B. The correct answer is 30 days because Maryland law requires producers to report any change of residence address to the commissioner within 30 days of the change. Reason A is not correct. 10 days is shorter than the statutory requirement, making it overly strict and incorrect. Reason C is not correct. 45 days exceeds the allowed reporting period defined by state regulation. Reason D is not correct. 60 days is too long and would violate the 30-day reporting requirement. Question 13. Under Maryland law, which of the following scenarios best illustrates a misrepresentation of policy terms in a homeowner's policy? A. Telling an insured that open peril coverage automatically includes flood damage. B. Assuring a homeowner that additional living expenses cover loss of rental income. C. Advising an applicant that personal property losses under an HO3 policy are reimbursed at replacement cost without a replacement cost endorsement. D. Representing that newly acquired property is covered even if not reported within 30 days. The correct answer is C. This scenario misstates a fundamental policy term by claiming replacement cost applies without the required endorsement, which is a classic misrepresentation under Maryland law. Reason A is not correct. Flood damage is excluded by standard HO3 perils, but this is an incorrect scope statement rather than a misstatement of the policy term. Reason B is not correct. Additional living expenses do not cover rental income loss, and this reflects a coverage scope error, not a policy term misrepresentation as defined by statute. Reason D is not correct. Newly acquired property coverage timing is set by the policy, but this is a procedural requirement error, not a direct misrepresentation of policy terms. Question 14. Which of the following is a misrepresentation of policy terms in a dwelling fire, DP1 policy under Maryland regulations? A. Claiming the DP1 secondary dwelling is insured under coverage B limits. B. Advising that the DP1 covers windstorm damage up to full replacement cost. C. Representing that extended coverage perils include earthquake by default. D. Stating that theft of personal property is covered under the DP1 without a theft endorsement. The correct answer is D. DP1 does not cover theft without a specific endorsement, so asserting it covers theft misstates a policy term and meets Maryland's misrepresentation definition. Reason A is not correct. Coverage B applies only to other structures, not secondary dwellings, but this confusion involves coverage application rather than a term misrepresentation. Reason B is not correct. Windstorm is not an extended coverage peril under DP1 and replacement cost basis is incorrect, but this is a scope error more than a policy term misstatement. Reason C is not correct. Earthquake is a separate exclusion, but this misstates excluded peril rather than a specific policy term. Question 15. Under Maryland's unfair trade practices provisions, which act by a producer constitutes misrepresentation of policy terms when placing commercial property coverage? A. Claiming that a standard commercial property policy automatically includes business interruption coverage. B. Advising that the stated value endorsement shifts all valuation to agreed amounts. C. Representing that coinsurance penalty won't apply if loss exceeds 80% of value. D. Stating that equipment breakdown coverage is part of basic property coverage form. The correct answer is C. Misrepresenting that the coinsurance penalty is waived at losses over 80% contradicts the terms of the form and is a direct misrepresentation under Maryland law. Reason A is not correct. Business interruption coverage is optional and must be added separately, but this misstatement is about coverage inclusion rather than a policy term definition error. Reason B is not correct. Stated value endorsement does agree on amounts, but this correctly describes the endorsement rather than misrepresenting it. Reason D is not correct. Equipment breakdown is a separate form, and this is an error of form inclusion, not a specific misrepresentation of policy terms. Question 16. A Maryland producer offers a signing gift but states it will reduce future premiums. Which practice does this represent under unfair trade regulations? A. Offering an unauthorized gift exceeding regulatory limits. B. Misrepresenting a future premium rate reduction as a promised benefit. C. Failing to disclose policy fees when offering a gift. D. Mentioning an unapproved premium financing option. The correct answer is B. Promising a gift that purportedly reduces future premiums when it does not misstates policy cost terms and constitutes misrepresentation under Maryland law. Reason A is not correct. Unauthorized gifts violate regulations, but this is an inducement violation, not a misrepresentation of policy terms. Reason C is not correct. Failure to disclose fees is an omission issue rather than a direct misstatement of terms. Reason D is not correct. Discussing an unapproved financing option is a licensing violation, not a misrepresentation of policy terms. Question 17. Which example qualifies as false advertising of homeowners insurance in Maryland? A. Announcing a homeowner's policy offers earthquake protection by default. B. Describing an HO3 policy as replacing flooring on a cash basis. C. Advertising an HO4 policy for commercial liability exposures. D. Promoting an HO3 policy as covering mold remediation under standard perils. The correct answer is D. Mold remediation is excluded under standard HO3 perils, and advertising it as covered constitutes false advertising under Maryland regulations. Reason A is not correct. Earthquake is excluded unless endorsed, but misstatement here is a coverage scope error without advertising context specifics. Reason B is not correct. HO3 valuation for flooring is typically replacement cost, not cash, but this reflects a valuation misunderstanding rather than false advertising. Reason C is not correct. H04 is tenant policy and does not cover commercial liability, but this misapplication is a policy mismatch, not advertising content violation. Question 18. In Maryland, which action amounts to false advertising of a dwelling fire policy? A. Promoting a dwelling policy as complying with NFIP flood requirements. B. Stating that extended replacement cost applies to coverage C under DP1. C. Advertising a DP3 form as excluding theft instead of including it. D. Claiming the DP2 policy covers sewer backup without endorsement. The correct answer is D. DP2 does not cover sewer backup without a specific endorsement, so advertising it as standard coverage is false advertising under Maryland law. Reason A is not correct. Dwelling policies don't address NFIP, but this is a policy scope mismatch rather than false advertising of policy terms. Reason B is not correct. Extended replacement cost endorsement applies to coverage A, not coverage C, but this concerns endorsement placement rather than advertising content. Reason C is not correct. DP3 is all risk for covered perils and typically includes theft, but misstatement here is a misdefinition rather than advertised promise. Question 19. Which scenario best exemplifies false advertising of a commercial property policy in Maryland? A. Claiming extended business interruption is included in standard package. B. Advertising automatic debris removal under the builder's risk form. C. Promoting a commercial property form as covering ordinance or law upgrades by default. D. Describing sprinkler leakage as a covered property peril in all forms. The correct answer is C. Ordinance or law coverage requires endorsement and isn't part of the standard form. Advertising it as default is false advertising. Reason A is not correct. Extended business interruption is optional, but this misstatement relates to endorsement necessity rather than advertising content. Reason B is not correct. Debris removal may be included, but subject to limits, and this is a coverage limit confusion, not outright false advertising. Reason D is not correct. Sprinkler leakage is often covered under extended coverage perils. This is a misunderstanding of peril inclusion, not false advertising. Question 20. A producer mails flyers promising a gift card when new business is issued, but this gift does not exist. Under Maryland law, this practice is A. Unauthorized rebate for policyholders. B. False advertising inducement of insurance. C. Failure to file advertisement with the commissioner. D. Misrepresentation of policy terms. The correct answer is B. Promising a non-existent gift card misleads consumers about inducements and constitutes false advertising under Maryland Unfair Trade Practices statutes. Reason A is not correct. Rebates involve premium refunds or benefits. A non-existent gift is false advertising, not a rebate. Reason C is not correct. Failing to file ads is a procedural violation but does not describe the misleading content. Reason D is not correct. Misrepresentation pertains to policy terms. This involves inducement advertising, not policy term misstatement. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.